Hey guys, Blackwatch here. I'm not gonna lie, I don't really know what I'm gonna talk about. I'm kind of just sitting in front of my chart. I know Tatiana did EU recap, and I think, yeah, Roberto did his backtesting on GU this week. I know Felix dropped a recap as well, so I'm not really trying to be too redundant. I'd rather find another way to provide value rather than just going over the same trades. Yeah, I watched some of Roberto's backtesting. A lot of the same trades that he took, I've taken, were marked up as well. So yeah, I don't really see a point in doing that. If you want to watch that, I think it's already been uploaded, but just look for the backtesting session with Roberto, excuse me, and then yeah, you can get some pretty good insight on GU price action this week, or at least towards the end of the week. I think what I'm gonna do is I need to mark up my charts for this coming week, and obviously I'm typically just doing GU, but I'll add in EU and AU, and yeah, I think I'm just gonna kind of think out loud for a little bit, and yeah, maybe you guys will get some value out of it. Maybe you won't. Maybe it'll be boring. But yeah, I don't know what else to give you guys, if I'm honest, and I'm not one for just stacking content to stack content. I find that's kind of stupid. So yeah, I feel like there's other stuff that I want to say, but now I can't remember. Oh yeah, so bar replay, right? I get a lot of messages about my bar replay and that kind of stuff. You know, I want to get to this level. I can't wait to get to that level. You get your amazing blah blah. I don't get it. Bar replay has zero indication as to like what you are as a trader in a live environment from a day-to-day basis. It's just fabricated results, right? Because it's all it is that I've memorized a pattern, right? I've memorized where these patterns present themselves in terms of, 15-minute structure, supply and demand zones, and catalysts for pullbacks, internal range liquidity, right? I have an idea of where I'll get reactions. From those reactions, I just look at a lower time frame, find the pattern that I want to see if it's worth trading from as a risk entry, or waiting for a reaction and then catching more of a continuation, letting order flow set up. All that stuff is just ABCs, right? It's 1, 2, 3. It's the same thing every single time, and you guys see this every single time I put a video out. It's the same stuff, right? And I know that the repetition helps you guys, so that's totally fine. The one thing I guess I want to just preface, or just let you guys in on, or whatever, is it's just not real trading, right? I get to blow through days of price action in a matter of minutes, right? I can hit, you'll see me hit like 4 or 5 setups, even more, right, on any given day. And it's just not how the live market works. There's a certain level of patience that you need to have, that like on the flip side of the coin, you have all the technical stuff, the memorization of the patterns, where they're come from and how they'll form and all that stuff, right? That stuff should be embedded into your brain. If you don't have that stuff down already, then you need to go back and revisit them until you can understand that stuff like the back of your hand, right? We've done the job at Phantom as coaches, taking all the complexities and then putting them into more of a simplistic view, so that way you guys can learn it and get that kind of shortcut, right? You don't have to go to the drawing board and pull everything out of your ass from scratch, right? That we've done that. So now it's for you to just take what we've taught you, take those simplicities, and just memorize them, right? And then obviously there's a few different pieces. You need to be able to put them all together and to help you get that edge in the market. But the other side of the coin is your emotions, your psychology when you're trading, your patience levels, right? That's probably the biggest thing, right? When I do bar replay and I'm just crushing all these trades, it looks cool, whatever, fine, right? But the amount of message I get, it's a little concerning, because I want you guys to understand and just realize that that's not how it works in the real world, in real trading, right? You're going to get very few setups in your trading time, right, that you're purely focused for. You can't possibly trade all of London and all of New York and be fully focused for that entire 2 sessions and catch every single trade, right? It's your job to be focused in a window, right? And in that window, if you get 1 setup, you take it. If you get 2 setups, you take it. If you take a loss, whatever. If you take a win, awesome, right? If you break even, right? You're just trading within your window. You should not trade outside of that window unless maybe you've taken 0 trades or you've taken 1 break even and you feel like, risking your capital, right? That's fine. But in theory, in order to be focused, you have to select like a specific window, whether it's the early London session or the overlap for London, New York, or just New York Open, whatever it is, right? Whatever your data tells you, you do best in, right? You want to look at that data again from journaling and studying and understand, where is that data tell me that my trades, or at this specific time or on these specific days, I do poorly, right? You want to understand that so you can avoid it. Because I guarantee you that if you were to track your data over months or quarters or years of data, you would say, I have a like 70% chance of losing my trades if I trade after 2 p.m. Eastern on Fridays, right? Or any day of the week after noon. I tend to give away quite a bit of money, but I do really well early in the morning on Wednesdays and Thursdays, something like that, right? That's the kind of data that you need to understand and use those times to just focus. Sometimes you'll get a setup, sometimes you won't, right? But going back to the original point, bar replay, you can get as good at it as you want, but you have to build patience, and bar replay is not going to do it, right? The only way you're going to be able to build that patience is if you practice in a live market, right? If you don't want to risk money, or if you don't want to trade demo because maybe it's building bad habits, usually what I recommend is just sitting on the charts, marking it up as it's playing out, and just putting on your long or short tool on an area that you would take a trade from. And then just do that for an entire week straight. Don't put any emphasis on clicking buy or sell. I don't want to, don't, whatever it is, FTMO, demo, live, don't think about MT4. Don't think about placing a trade. Just mark it up and just let the trade play out. See how you would have done. It will build confidence, right? Without striking your emotional chords. Like, you will just, believe me, it'll work. Just give it a shot. Before Phantom, I used to tell other people to do this all the time. I've told a couple people in Phantom, but it's not something that's like widely practiced, and it's something that I highly recommend. And you can say it's just paper trading. Some people consider paper trading with demo and that kind of stuff, but my concept, or this concept, is just don't worry about executing on MT4. Just mark it up, see how price plays. Don't care if you win it or lose it. Just get the data. Just worry about marking it up. Just worry about your analysis. But also build that patience, right? Set your alerts at the right levels, and then just let price play out. Massive rant. But yeah, I just want to set the right expectations, right? Because it's important to understand, like, it's just, bar replays, whatever, right? I know a lot of people like watching it, and my thought process is there and that kind of stuff. But all it is just memorization, right? All I've done is memorize patterns. I have a good idea of where price might react from. There's nothing crazy about it, right? It's all the same stuff. And that's all you need to do. And then work on yourself, work on your patience levels, work on where your pain points are, understanding that. Do you overtrade? Why do you overtrade? When do you overtrade? What does it look like typically when you're doing it? Like, is it because you've lost trades and you feel like you need to make it back up? Is it because you've missed a good setup and now you're trying to force extra trades or just other trades to kind of get into it? If the setup was there and you missed it, you just missed it. And it is what it is, right? It's usually better to just walk away. But don't put too much pressure on yourself. This stuff takes a long time. A really long time. And like, I put something in the mindset channel after Dane posted his post, and it was the idea that, like, as coaches and as the founders, right, as Brad and Phantom, the amount of effort put into the video content and to answering the questions every single day, we've helped thousands of people. So there's a certain layer of experience that we've gained just from Phantom alone, right? So not only have we put in all the hours to learn how to trade, but we've also refined it with each other as a team. And then we've also pushed it to the community for over a year now, every single day, right? A lot of you guys are working solo. You're working by yourself. You don't have a huge team or even a small team or anything like that to bounce ideas off of, to formulate new ideas, or to say, hey, like, does this look good? Or like, hey, like, should I take this, but how's my analysis? Why did I take this loss? What do you guys think? Like, what would you have done differently? And while the community is there to support you and that kind of stuff, it's largely the same, right? Everybody's kind of in their own silo, just trying to learn. They've got their heads down. They're just studying, right? But just keep that in mind, is that we have more of an accelerated experience model because of the community, right? And it's something, I've told other people to do this. Like, if you are struggling to kind of piece things together, it helps to find a handful of people that are in your time zone, that work around the same hours, that you think also have the same drive as you. A lot of people just watch content and they just think it's going to just soak into their brain and they're going to be good, but that's not how it works, right? You could find a couple people that you trust to be your accountability partners, or whatever you want to call it, and just work together closely, right? Bounce ideas off each other. It will help, right? But keep it tight. Don't make huge groups. Huge groups, nothing really good comes out of it. It's hard to be accountable for each other. I'm talking like 3 to 4 people max. Anyway, hopefully you got from some value from that, or hopefully opened up some eyes for some people. Some people probably skipped ahead, but whatever, it's fine. Yeah, so I'll just go over more like my old market commentaries, what I'm kind of looking for on GU and EU and AU. And yeah, we'll just kind of go from there. I've been rambling for about 13 minutes now, so that's great. All right, yeah, let's look at GU. So we're just, obviously, same as always, we're just going to start off on the weekly. So now I've gone over a lot of this stuff in prior commentaries or prior videos, but I'll go over it now. So everything that I do, right, is based primarily on the weekly and daily if I'm going to look for swing positions. Now, I think some of you guys have seen it on Instagram, and I've shared the entries a couple weeks back. I've been in a couple trades from basically up here, right, and they're just melting. And it's mainly because I'm fully aware of what price is doing in terms of order flow, right? And now when we talk about order flow, we're talking about the interaction between supply and demand, the structure between it, and how liquidity is used and that kind of stuff to build those supply and demand zones. And what happens when price revisits those zones after hitting a major supply or demand zone, right? Which in turn causes reversals. So that's the general basis of order flow. So when we talk about order flow, we're talking about which direction is price moving based on that order flow, and then the structure between the zones to determine what the expectational order flow is, like where is price headed. So on GU, right, we've known that we've hit this larger supply zone right on this weekly. One thing before we started pushing to the downside is that we did take out this high here as kind of an external range liquidity point, and more or less price failed to break the high, and then it started pushing to the downside. Now, from a weekly level, right, what we want to understand is like, okay, well, where's our low, right? If this was our high, where's our low, right? We had this, that got taken out, these more or less equal lows got taken out by COVID candles right here. This is where price tanked. Now, This is obviously a massive weekly candle, so we'd probably want to break this down, but I'll just cover the wick for now. And this is kind of like the absolute extreme of demand. Now, as it stands, we have the major supply, which we've gotten a reaction from. We also have this demand here. Now, of course, we have this supply as part of this chain, this reaction, right? So when we're talking about order flow, we're talking about price between this major supply zone and this major demand zone. Now, before, we had bullish order flow, right? Bullish structure, right? It was coming off, well, it was taking this liquidity, but then supply failed and then demand took control. Now, price came into supply and demand is failing and it's making its way downward. Now, when we're looking at things like internal range liquidity and catalyst for pullbacks, what we're essentially looking at is we're looking at the previous leg, right? So in this case, we've been bearish. The previous leg was bullish. That means all the demand zones, both the demand itself and its low, is used for liquidity, right? So price will tap into it, it'll give us a pullback, but it does not give us a reversal, right? Because again, what we're dealing with is catalysts for pullbacks. These are just liquidity points. They're not enough to give price that reversal. I couldn't tell you exactly why, but that's just the theory, and that's kind of tried and true, and that's kind of what we practice. So when we look at this, what we want to do is we want to take this previous bullish leg and we want to take all the demand zones, right? And then we want to just drag them across as catalysts for pullbacks, so we can understand that when price does break structure and it pulls to the downside, what might it react off of and what should it do, right? So we'll start with this kind of demand in here. This is more or less our first level of demand, right? So it's not necessarily our catalyst for pullback yet. This is our level of it should go long from here, and if it doesn't, then we have reason to believe that price will trade lower. Now, a better way or a different way to look at it is to basically understand, like, how is this demand zone formed, right? Like, what did it come off of? And what you could do is you could say, well, it's reacting to this supply right here, right? So you can see price pulled down, pulled right back up. You see it wicked into the supply, and then it left this demand, and then ultimately it failed, right? So those demand zones are typically formed by other legs, right? So again, these demand zones here, how are they formed? Well, they were formed by supply zones to the left, right? So in here, these little buy to sell wicks, right? You get a little reaction in these guys here. So I'll just mark it up. Demand, buy to sell wicks, reaction. I think so anyways. I can't really tell. Right, so we'll just say that is supply. Right, so now what we see is we see this reaction, right? You can see price trades below this, so it even has a sweep of liquidity, right? Now, what does this do, right? So price pushed up, it hit this larger supply zone, which I'll just drag this way. Price pulled back, but where did it stop, right? Why didn't it just keep going down? Why didn't it pull into this one? Why didn't it pull into this one? Well, it's because of this, right? Demand zone, interaction, right? Buy to sell wicks. That's our flip zone. Supply. Where does price react? Right here. This is our demand zone, right? This is why this stopped here and then pushed higher, right? So it's just a matter of understanding, like, where internal range liquidity is and these catalysts for pullbacks kind of form, right? So it's just the same stuff. Now this leg here, right? I'll mark this up. This is internal range liquidity. This is also internal range liquidity, right? You see how this works, right? We could even look here. Again, internal range liquidity. Where is this? Internal range liquidity, right? And then it's the same thing over and over again, right? It's like, here we have this swing high, swing low, you know, all this stuff. Now there's not a ton of supply zones in here, but the same idea, right? Price pushes up, supply is in control, so it stops at supply, trades lower, right? Now, again, when supply is in control, you may not get that full coverage, or that full, whatever you want to call it, right? It doesn't take all this internal range liquidity. It'll save it for another time maybe. But you can see the same thing here, right? Now, the idea to remember is that when you have these various demand zones, like here, 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 right here, all this stuff, when you start breaking the initial demand zones, like these first ones, right, the idea is that the rest of these should go, because it's just liquidity, right? These are not the points where price will reverse. In theory, price should have traded up, down, and then higher, but it failed to break that high and ended up breaking this low. And then you had this where you get a little bit of reaction and it just fails lower. Here you can see that price traded off of this reaction, you get this, price trades lower and then right back into it and then drops. They're not always going to give you a setup, right? These catalysts for pullbacks, but they are the best areas to catch continuations from, right? And you can go through this on any time frame, and you will find this over and over again. We'll go on lower time frames, and obviously look at that. Right, so this is currently what we're dealing with. We have internal range liquidity within this leg here, and then we have price trading lower. So if we look at these levels, right, so we had this, right, bit of equal lows formed right there. Price took it out and then it pulled back. Now what did this come off of, right? It came off of this demand zone. Again, these are weekly zones, so they're pretty big, but I think what we'll probably have to do is go to the daily and just clean this up a little bit, but still. So now we have, right, we have this. We'll probably just do this one is more the extreme, right? Price is trading into it. However, it's been mitigated by this here. Right, so price is currently in that. So in theory, what we could see through this is we could see price pull back into something like this, maybe these buy to sell wicks right here, and then trade lower. But ultimately, these demand zones should be failing, right? That's the idea behind it. But what we want to do is we want to look at this, right? So if we look at this leg to the downside, right, that took out this low, our valid supply is this zone right here. All right, so we need to mark this up because we need to understand where the best demand zone is for a potential reversal before the extreme. So we'll say supply, right? Now you have all this stuff here, right? This doesn't quite tap. Yeah, so that misses that, right? So right now this is our reaction to supply. This guy here is our, right? This is something that's probably going to give us a deeper pullback. Let's say we get this, we get a little bit of this, and then whatever, right? We get a nice pullback here, kind of as we did here. Price could potentially come up and take this high and then ultimately fail again, or it could potentially just give us a new high. It depends, right? This is something that we just need to trade from lower time frame. But generally speaking, this should just be internal range liquidity, but it is a high probability flip zone. So there's a lot of possibility for price to trade higher, right? So if you were to catch a short here or here or something like this, when you get to this area, you may want to partial heavily or remove the trade, right? You might not want to hold on to that. But there is opportunity if price started to shift bearish again, you might want to take a short and then let it run to the lows here or something like that. Right, so this is what it kind of looks like on the weekly for me. And then let's go to the daily and just take a look. All right. So what we'll do is we will just clean some of this up. Obviously, this was very rangy price action here back in December of 2020. I can't believe that was that long ago. All right. All right. So all right. So this is where price currently is. Yeah, it's really messy. The weekly's actually better. But so basically it's the same thing. The only issue is we just have a lot of choppy price action. So what we would essentially do is basically, again, just go through, take all the supply zones, figure out where our reactions are, like this one. We'll just clean this up to here, right? And then what we have is we have this wick mitigating it, so you'd have to clean this up, right? You want to be doing this every single time. This is just something that you're going to probably want to do as prices generally in this area. Like for instance, like I wouldn't be marking this up for this week. I would just be looking at like whatever's happening in here and trying to figure out where price might give me a pullback so I could try to catch a continuation short. But I guess while we're actually at it, I want to talk about the weekly real quick, right? So, right, the model, right? We know that we know the model, right? It's if we are bearish and then we stop to sit at demand and then we give that reaction, right? We look for price to trade below demand so that we know that supply is in control. Then we look at that reaction and we look to trade from it, right? That's the general model that we're looking for. Demand, whatever, entry, right? We just want that reaction, right? Right, that's pretty much it, you know, and we want to see maybe a bit of a supply chain to kind of help us more or less find those mitigations and where price may kind of stop and then look for a trade from. And then obviously lower time frame, want to look at liquidity stuff. But if we look at this, right, we have this, just drag this across all the way. We have these reactions to that demand, right? And then from here, right, we have these demand zones like this, right? Because again, I'm just going to delete that so we can see it. Right, price pushed up, it failed to take out the high. It pushed down and then it failed to take out the low, right? But at this time, when this low was taken out, we had a firm understanding that price was probably bearish. So when price reacted here and then it traded higher, well, it reacted and then traded upwards. It then took out that demand. So now we know that supply is in control, right? So from this level, right, we've had supply in that wick. We've then had basically these candles here as supply. We've had this reaction, this candle here as supply, and then this guy here as supply, or this guy, however you want to see it, doesn't really matter, right? And then even this, right? So price came down, it failed to take this high, but ultimately what did price react to, right? Why did price pull back into this? Well, it pulled back into this because it's part of this supply chain, and then it just melted, right? So it's the same model, demand reaction while supply is in control. We confirm it by the low going, price comes off a catalyst for a pullback, trades back into these zones, and then we trade a short, right? So yeah, back to the daily. All right, again, if you look at these zones from the daily perspective, we can clean some of that up. Right, and then this one, right? So it's like we have a couple zones, right? I remember watching this zone here, but then there was this one, right? So now what is this? Internal range liquidity, right? Meaning all these demand zones here after the first one fails is what? Catalyst for pullbacks. So again, only some of them are going to give us the setup. Some of them are going to give a reaction that goes into a previous supply zone that is tradable, right? Some of them just get taken out, right? Because again, the lows of them are liquidity. So price will target these levels. So we have the extreme, but we also have this demand right here, right? That's our first level of demand. What is this? That's the reaction to the demand before the demand fails. This tells us that, again, supply is in control. So where do we trade from? We can trade from this. Now, one thing I want you to keep in mind is if you do like equilibrium or like true smart money concepts. Oh man, that's the other thing that kind of pisses me off. Everybody loves saying smart money concepts now. It's a stupid buzzword. Everybody thinks, oh, I'm trading smart money concepts. I'm trading smart money concepts. You're not trading smart money concepts. You're trading basically what Phantom taught most of the industry. Everybody kind of took what we taught them and started calling it smart money concepts and all this stuff. Smart money concepts in its infancy, or I guess in its original state, was just equilibrium, right? Smart money buys in discount or sells in premium. Dumb money does the opposite, right? That's the whole thing behind smart money concept, was just that there's smart money and there's dumb money. All this other stuff is not what smart money was. Maybe you could argue that now it's evolved into it, but whatever. It's just, I think it's just a misuse of the terminology, because no one else knew what to call it. But all it is just you're taking larger ranges, larger zones. Like I could just take a weekly candle, like right here, right? If I could just take it from the extreme, like if I just said, where do I want to trade from? Do I have my inside bars on? No, I don't. Okay. Right, this. Oops. I just deleted all that stuff. I said this is a weekly candle, right? All the smart money concept. This is how I used to trade, right? This is all I ever did. I took a weekly candle, right, and I looked for the next week to trade into the premium or the discount, and then I would short it. So here, right, this is an inside bar, right? This is a weekly candle. All you would do is you would wait for price to pull away and then pull back into the equilibrium of it and trade into the premium so you could short it at a good price, right? That's all smart money concepts is. And if we go down to the 15 minute, right, what you'll notice is what? All the best entries happened in the premium pricing. Everything else down here was just liquidity, right? As soon as price dipped into the premium side of pricing for shorting, it always just dropped, right? And that's how it worked. So if I go up here to the weekly again and I say, oh, well, even, something more nondescript, right? This. If I said, okay, this candle right here, right? This is the high, this is the weekly candle. I'm gonna drag this out, please, right? And all I want to do is I want to look at the next week that pulled into it, right? For anybody that wants to swing, this is how I used to do it, right? So now that this candle pulled away, this is the week I want to focus on. Go to the 4 hour, right? Look at this. Every time price dropped into the premium, you found your best entries. You would just trade anything within this zone here that gave you a supply or demand zone reaction. So anytime price dipped up into the premium, you would just take it. Go to the 15 minute. It's the same thing, right? Wait for price to trade into the premium, you short it. That's all smart money concepts is. All this other stuff is just, it's just a conglomeration of everything. But yeah, that's just a pet peeve of mine because people don't seem to know what they're talking about. Anyway, so where was I? 4 hour. No, daily. Sorry. Anyway, we have demand, we have the reaction, right? Then we get that flip zone. Smart money concepts. There you go. Equilibrium. Basically, as soon as price trades in that premium, short the shit out of it. All this other stuff here, internal range liquidity. You don't want to expect price to give you crazy results, right? You don't, longing from these zones here are okay for intraday. If you're not careful to cut them at the right areas, you're just going to either give money away or you're going to break even a lot, that kind of stuff, right? Right. Understanding the higher time frame flow is gonna give you the right idea for what direction to trade in, and then you just kind of follow that. But yeah, so internal range liquidity, catalyst for pullbacks. Let's see, right? That's whatever. That's demand. We can say that's a CPP. And again, not all CPPs give reactions. Some of them get taken out and then react, which is why if you want to trade counter trend, you don't necessarily want to long it from the demand zone. You want to typically wait until it's failed because you want to wait for price to pull back and then give you an entry from a valid flip zone or a CBP reaction, right? You don't want to just long it from this because it's demand. Like here, right? You get a reaction to the upside, but it just pulls back and it fails. I'm sure if we look at the 15, it probably pulls back into a 15-minute zone. Was it this one? I wouldn't really say it's a 15-minute zone, but there's some buy to sell wick here for some reason. And trades off of that. Whatever, right? You wouldn't really trade this until these lows start going anyways. Basically, after this low goes, it kind of shows its hand, but still, even if you traded from this extreme, you would have got swept. Probably some news. But that's the general idea, right? It's like you could have longed from here. You would have got swept on this low if you traded from the extreme. And then maybe you would have caught something down here on the 1 minute, right? This is late New York anyways. This is almost New York open. But yeah, and then eventually the low fails, right? Because the low is weak, right? You could say that this is demand because it's the extreme, and the extreme is always good. But I mean, look what happens, right? This is why you have to understand what direction price is trading. What's weak, the high or the low? If the low's weak, then you don't want to long from this, right? All right, and then it's like here, right? Why do we get this huge reaction here? Well, if we look closely, right? If you look at all these demand zones, they're just kind of higher lows, right? In this bullish leg. But this one is our kind of first level of supply reaction. And then the demand. All right. So there are varying levels of importance with these demand zones or CPBs, right? Some of them are going to be stronger than others. A lot of them that are giving like big corrections or big pullbacks are zones like this. All right. Which again, if you find a setup off of this and it goes long, go for it, right? Just understand that overall it is probably short. So you don't want to swing for these highs or anything like that. You're just doing the same thing you did here, right? There's a flip zone. This is a flip zone. You're literally doing the same exact thing, right? You're just looking for that initial demand to fail and then to trade from that. It's like even this, right? You have this on the lower time frame demand, right? So at that point, this, if you're looking at just the 4 hour, this could be seen as a CPB, right? So in this case, you get the CPB, which brings you into your entry right there. Anyway, I feel like I'm just rambling. But yeah, so I mean, that's kind of what I'm looking at for GU. We know that we've had this supply chain. We know that supply is in control. I think there was some hesitation on my part in the last, not the last commentary, but like probably 3 or 4 videos before this, where price was kind of playing out from here, right? So price was ranging around because this is a daily flip zone. A lot of us kind of had the idea that it would want to trade short, but it was hard to kind of catch these shorts because of this range. You would take it, it would go, it would come back, take you out, and all that kind of stuff. But you know, you got to build liquidity before you can sustain a trend. So it is what it is. But right, like you know, one thing you could study is you could say, this is called the date and price range. I use this a lot. It's like, okay, well, once we hit a daily flip zone, what's the average time that price will range for? All right, cool. That one was 20 days. Okay, here's another time that we hit a major supply zone. How long did it range for? From reaction. All right, about 11 days. What about this one, right? 14 days, right? Here's another range before it really took off, about 16 days. We can tighten that up to about there, 14 days. Another range. Is a much bigger one. This is like a whole month, 34 days, right? The idea is that price doesn't just reverse right here. There was a bigger kind of push on price, right? There was a lot of liquidity build. It just kind of shot down. So maybe a different story. This is more of a, maybe like a 3-week period, daily 6-day period. But even here, right? Here's another one. All right, 15 days. Right. So the point of this is just understanding that when price hits these supply or demand zones on the higher time frame, you should expect price to range a little while, right? Out of all these points, right? There's a couple pivots, right? It's probably the same amount, right? So we had one point where it just shot up, another point where it just shot up. They're all counter trend. Here, another range. Here, again, like this is like 6 days. This is like whatever, 2 days, 3 days. But for the most part, what we're getting on the pro trend moves, right, just from the small segment, small sample size, what we're getting is we're getting large ranges in significant areas, right? Why is that? Well, it's telling people like, hey, I might want to buy here, get in while you still can. It'll push up, people get excited, they'll get swept out. Like, oh, well, actually it's running short. It's like, okay, cool, run short, ranges around, takes out the highs. It will just mess you around for days, right? The average is at least a week to 2 weeks, right? Again, here, that's a big one. This is a mess. I don't know. It's just data, right? It's just data to understand, to help you understand. Because again, it's good to learn this stuff, or at least study this stuff, or at least have an idea, right? So that way it's like, okay, we just hit this daily flip zone. You know, I'm gonna try to keep stacking my shorts. I know it wants to run short. If I want to swing this, I just need to keep trying to get in, but I need to understand that I will probably take losses, or I will take a lot of break evens, because price tends to range for X amount of days. Again, it's just a data point. There's nothing like super solid behind it. It's, again, observation. Don't go nuts with this kind of stuff, right? I feel like I need to put a disclaimer on all these videos. Some people take things very, very, very literally or to heart. It's like, okay, I said 20 days here. It's a 15.62 pip pullback, and I need to make sure that I stick to that exactly, or I can't ever trade in my life. You know, it's like, you can't do that, dude. You just can't do that. I don't even know why I'm recording this video, honestly. I might just cut it off here. All right, so yeah, so GU, it's running short. That's my forecast for it. So enjoy that. Yeah, we are in some major demand, right? Weekly demand zones. We should see some pullbacks here. Again, a lot of this is just liquidity, right? We've got some demand chain going in here. The price is probably just going to rip through this, is my guess, and do something off this extreme, and then just pull back and then continue shorter, right? Because if we look, I mean, if we look at any of this other stuff, right? We'll just go to the weekly just because it's cleaner, right? All these legs, right? This huge leg here. I wonder how many times people like came into this as like, okay, finally we got some we got 2 weeks of bullish price action right here. People probably thought this was gonna moon, right? Here even, it's like this is another 80 days of bullish price action. People thought this was going for the highs. Like, oh, finally it's switching up, it's going higher. It's like, no, it's not. It's continuing lower. Why? It's got to take out this internal range liquidity, right? The order flow is bearish. Even the same thing here. It's like, right, we had these supply zones and price just traded higher, and then eventually just, I mean, COVID hit, so this is an outlier, but ultimately speaking, like, it just didn't do anything from these supply zones. It just trickled through them, you know, and this is the same thing. It's no different. It's just gonna trickle through these two. So anyways, I'm just fucking rambling. EU, haven't looked at EU in a while. Now this is interesting. Just from an internal range liquidity standpoint, we've filled this, right? You can see prices traded. I mean, like, it came to the extreme of this demand. Not exactly this low itself. It doesn't have to, but there is potential for this to just be liquidity right here, because this failed to take out this high, right? Price came up, came down, failed to take out this high, and now it's pushing back down. I would probably say that this is just liquidity, and that something may happen more on this extreme right here. You kind of look at the monthly. Took out that low, took out this high, supply. Yeah, I can see this trading lower. Something might happen off this extreme, but generally speaking, like this is pretty bearish. Right? Again, it's on the monthly, so it's whatever. Weekly, we've taken out this internal range liquidity. We've taken out all this internal range liquidity. Right? Price hit all these zones, and for the most part, like you can see, price just did not give a shit. It just like ripped through most of it. Right? As soon as we took out this supply chain, right, the liquidity here is what gave a lot of this reaction. So again, a lot of these previous supply zones that are catalysts for pullbacks, price doesn't have to react to the supply itself. It may react after taking out the high. Here again, right, we've got internal range liquidity. The interesting part about this is it's pretty much completed this leg. So yeah, that's interesting. So it's possible, again, I'm just going to take the low of this, right? I'll just get that reaction in there. All right, it's possible we'll get a reaction off this. My guess is that it will continue bearish and trade into the zone, and then from there we'll kind of need to see what it wants to do, just based on the fact that overall, like this high is still intact, and this was our lowest point, right? So we took out these lows and then we took out these highs. So generally speaking, we're in a complex pullback, but we may be bullish potentially. Yeah, but obviously with Russia, Ukraine, there's quite a bit of volatility in the market. So it's kind of hard to say what price wants to do in terms of the US dollar right now, but we'll see. We'll keep an eye on it. But yeah, if we break this down, it's kind of similar. We've hit supply right there. We've hit supply again here, right? What caused the pullback into this zone right here? I remember marking this up like months ago. I remember being in this demand zone, which is kind of crazy. Yeah, we were in this demand zone here, and then price was just flying, and then ultimately, obviously, it failed to take out that high and just dropped lower, started taking out these lows. It looks like what price has done here is that it came off of this demand, which served for a catalyst for a pullback. That demand then failed and then traded right back into whatever's happening in this wick here. Right. I wonder if it doesn't quite hit that EQ point there. That's right. That one does. So the interesting about this, right, is that there's not much demand in here. Ever since this low failed, it was just destined to just die off. We had this supply, right? And then we had this demand, right? So basically this was our flip zone. Demand, right? So we know, again, with these flip zones, we tend to get bigger pullbacks, right? But it's not always going to be like take me to like my previous like structure point and then drop from there. It's like we get a reaction, right? Whatever it is, we just try to figure out the best way to trade it. In this case, it gave us a very lengthy range of 80 days, almost 3 months of just range. And I remember a lot of people, I feel like a lot of people turned off of EU in this range, which is kind of funny. But I mean, I think that's rightfully so, right? If price action isn't there, you just move on to the next thing. You don't have to trade EU just because you like it. Like you can trade GU, you can trade AU. AU is one that I want to talk about more so than EU right now. I think EU is kind of boring. But we'll go to the daily real quick just to look. Right, there's that really long, shitty range. And then even if you tried to short from this extreme, you still would have got shafted, right? Because price traded above the high twice. So even if you tried to trade from this one, you would have been screwed. What does that look like on the 15? What did I do? Daily? I went too far forward. All right, even if you had this in mind, you would have, yeah, it would not have worked. I wonder, what was this? Feb 10th. Yeah, basically just swept these equal highs and then drop, but not ideal. Not the sexiest price action. I'm sure people took losses in this. This is another lengthy range in here. What is this? About a week of choppy price action. That tends to be the case. A week of chop and then a little bit of trend. Yeah, 7 days chop trend. Anyway. Yeah, not much on me for on EU. Actually, while we're at it, GU. POIs for GU for me, I've got a demand reaction here and I've got this buy to sell wick. Right, so looking at price potentially reacting off this CPB here, pulling back into this zone and then trading lower, or of course this zone is always valid as well. If you go to the 4 hour, we can refine that a little bit. Here, but I do understand that there's a window of imbalance here. So that's annoying. Just keep an eye out for that. Yeah, so I mean, that's it, right? So price will either pull back into this or it'll just keep trickling down and playing off of the momentum, right? So if we have supply here, it might just continue off of this as well, right? All we're doing is we're marking up the valid supply zones and trying to figure out which one's going to give us a reaction on a lower time frame. Ideally it would be this one because it's a reaction to previous demand. This is more of just a reaction to taking out the low. EU, same deal, right? So we want to look at this. We want to say, all right, where's my demand? That's my demand. Price took out the low and then reacted to the upside. We do have this as a potential supply zone. All right, price failed to get up to that level there. I'm sure on the 15-minute we have maybe a chalk to the upside. Yeah, we do. But I mean, it's here. Take out the low, take out the high. Price trade bullish pretty much ever since. See, we took out these highs and then just instantly pulled back, right? This is pretty typical for price that's just kind of setting up, right? In the sense that it's been bearish. Now all of a sudden it went bullish for the pullback. You typically get a couple breaks of the highs and then these deep corrections, and then price just tends to go. So keep that in mind too. Just kind of spitballing here, you know? Yeah, so what did price come off of? Price is just coming off of some supply within this range here. Must be something on the 15-minute. Yeah, see, these kind of large wicks like this always kind of throw me off. Obviously, supply, price traded up into it, and then it stopped moving, and then it traded lower, but it's still kind of a pain in the ass to deal with these huge wicks. Like if I was trading within this period and I had this huge wick here, I would probably just ignore this, to be honest. But it reacted, it stopped. This is ultimately what price traded into, just this range. I wouldn't say it's anything like super significant, but it, you know, it happened. It's there. So yeah, so right now, I again, these lows are weak in theory. It should be trading lower. However, we have reacted off of this demand. Even though it is a, what is it? Right, even though it's the extreme, right? So of this leg, right? But if we look at it from, you know, true highs and true lows, our true low is this one, our true high is this one. This is just complex pullback within it, right? So in theory, this low is not really significant, but it's the higher time frame. So from an intraday perspective, it may give a trade up. Let's go to AU. Sorry, I can't deal with EU too much. I don't like it. All right. Now this is something that I've been talking to Aaron about for probably a couple months now, because we were looking at price from this level here, this POI specifically. I'll give you a second to see if you can figure out why it's so significant. But we've been looking at it basically since, I'm pretty sure it was since this low failed, right about here. So this would have been back in November, because we were looking at it and we're like, oh shit, it's the model. Because like if we go back to GU real quick, right? I'm just gonna delete all this. If we go back to GU and we look at the daily, right? A lot of my original short ideas came off the fact that we had demand, we had the reaction to demand, we had the supply chain, which I'm not going to mark up, just visualize it, right? Supply, 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 supply. And then ultimately that demand failed. Price pulled right back into that demand, and it gave one of the best, like, higher time frame model, you know, fractal setups that you could possibly get. And if we look at AU, it's doing that on the weekly. So with all of this down here as internal range liquidity, yeah, I've just been staring at this pretty hard, because I think what I'm going to try to do is I'm going to try to get in short here. But what did we learn earlier, right? Depending on how price wants to trade within these higher time frame zones, we may get a couple weeks of range, right? We have to keep that in mind. Like if I say, all right, well, if price trades into here and then we get about, I don't know, you know, I'll give it like whatever the average of like 20 days or like 14 days or whatever. Oh, that disappeared. Whatever. Right. The idea is that if price taps into that, it may range for a while. So we just need to be aware of that. Right. But from, again, the model perspective, right? What have we done from the left? We have internal range liquidity. We've taken out this high. And we've now taken out the low. So demand is failing. Right. So here again, same deal. Reaction. That low fails. Price decided to sweep the high and trade into this wick right here. Right, cool. If we look at this whole weekly candle again, right, what was I saying earlier? This whole weekly candle right here, price tried to trade into the premium, right, a couple of times. The only time it ever succeeded in doing it is when price decided to say, okay, I'm gonna die now, right? This is, again, this is what smart money concepts was. It still is. People just, people don't see it. But anyways, right, that's the idea, right? Anything built within this is just liquidity. This is dumb money, right? People who are trying to sell it from these zones, selling in the discount rather than in the premium. That's dumb money. So price traded into it, and if we look for the 4 hour, see what that kind of looks like. Right? Structural liquidity at the EQ, price traded up higher into the premium. Not a very great POI, right? Just traded into this higher zone. But if we look closely, what we'll notice is that we have demand, buy to sell wicks, no sweep of liquidity, nothing to sweep there. So it sweeps it, right? And then price trades lower. So whatever, right? But that's the idea, right? So we'll go back to the weekly and we'll look at this again, right? So we had this, that demand failed, traded higher, well, sorry, traded up into premium, traded below this level. This was our true confirmation that price wanted to trade lower. And then, yeah, we just basically look into the left for some demand, right? So we've got a little bit of supply there, or we could use the whole candle. It's kind of whatever. But I'm just trying to justify some of these reactions. Right, so we got our catalyst for pullback, doesn't sweep any liquidity at all, right? So you can see it again as it's just a flip, and doesn't sweep, or it doesn't trade anything. Jeez, doesn't sweep anything, and then price trades above it, and then before taking the low, it trades above it again. So now what we've got is price reacting off of this demand right there as our catalyst for pullback. Again, these demand zones, they don't give us reversals. They're just setting us up for continuations, right? To take out the rest of this internal range liquidity. I know I'm repeating myself a bunch, but it's such an important concept. It's like one of the primary concepts. trading continuations is super important. You need to know when that price might not trade to the extreme, right? If you get a bunch of trades to the extreme like in a row, it's probably not a good thing. You're probably looking at just liquidity building, and it's going to rip straight through it. But anyways, right, if we look back again, what's the model? If supply is in control, right, why does demand give a reaction? To build liquidity, right? In this case, we take the high, we sweep this high, and then we trade below that demand reaction. That indicates that supply is still in control. So then we trade into this, and then we trade lower. Demand, reaction, sweep, entry. Right? Every single time. Doesn't matter what time frame it is. But if you can catch these on the higher time frame, like the weekly, and you can get in shorts from up there, you're going to be doing pretty well, right? Just try to scale in, try to get as many positions as you can. TP at reasonable areas from an intraday level, pay yourself, but don't be afraid to let one or two of these positions just run, because there's a very good chance the rest of this range will get taken out, right? We have demand here. All right, and that's more or less what price is reacting to right now, right? So we had this CPP, which gave us a setup. We've got this one that's potentially giving us this entry, right? So I want to see price trade into here. Now, what would be nice and would stroke my ego is that if price ranged around in the discount and then dipped into premium and then shat the bed, right? And if it does, yeah, I called it. But it's not about calling. People love calling trades. People always say, oh, I called that, I called that, I called that. It's like, who gives a shit? If you're not executing it, it doesn't matter. Seriously, it doesn't matter. Execute it. And if you don't see me in shorts from up there, like, please just give me shit. But yeah, that's the idea. We've got the same thing, right? We've got demand, a reaction. Whoa. Come on. Sweep. That demand has now failed, indicating again that supply is in control. This was actually equal lows right there. Nice piece of liquidity. Right, and that's now been swept. This CPB has been tapped into, and now we are on an upward trajectory to tap into this potential zone, which is also part of the supply chain. Right? It's looking pretty good. I'm not gonna lie. Yeah. What's today's date? March 7th. Okay. So, right, again, the cool thing about this model particularly is that when you take this low out, price doesn't really tend to do much. It tends to just kind of blow right through it, right? If we look at GU, where was it? This one, right? This would have been our break-even level on that. We'll look at the daily. Right? What did price do? Price came down, pulled back slightly, and then just kept going down. Now, obviously, it's pulled up. Like, you're looking at potential TPs after this low goes, but generally speaking, like, this demand zone at the low isn't going to do very much, right? If the model's right, that's typically how it works out. This demand, the weak low, you might get a reaction or something, but generally speaking, it just gets blown through. So we have A, right? So that's what we're looking at. We have some nice POIs within this weekly zone, right? Again, this high gets taken out. This demand zone here. It's reactions within these wicks here. Some nice clean POIs in the premium. It doesn't have to trade the premium. It doesn't. Believe me, this premium discount is a nice confluence, but it's definitely not the end all be all. It is not a necessary confluence. You don't have to say, well, it's not in the premium, I won't short it. If that's not the case, you don't have to do it like that. But it's just a nice confluence if it does. So we'll go to the 4 hour. I want to see what this looks like in here. So now what I'll do is I'll basically say, okay, well that high got taken out there. I'm going to find this demand zone right there. See, this is my reaction right here. That is a sweep of reaction right there. So again, if you look at it from a fractal level, that's kind of what we're looking at. Which POI is in the premium? This guy right here, and of course the extreme. The extreme is always valid. However, what I like to see is that I have potential supply chain. So now I have this very nice 4 hour supply within the premium of a weekly zone. I'm going to set my alerts just below the zone, add a quarter way up, and then another one at this 4 hour zone, right? Because again, what ideally I would like to see is a range. I don't necessarily want to see it because I want to trade it and whatever, but it will indicate to me that they're trying to stack a heavy position, right? So it would be nice to see them do that. And then, yeah, just basically just take it all out, dip up into this, and then drop. It might take some news to do it. I don't really know. But yeah, that's kind of my outlook for, I don't know. Yeah, GU, EU, and AU. I don't even know if that was an outlook. I feel like that was just rambling for an hour. That's shorter than usual, so I'll take it. Yeah, I'm going to call it here. I don't know what to call this video. I wouldn't consider it very targeted, but you know, I hope you guys took some value out of it, and yeah, I'm gonna go. So I'll see you later. All right.